Welcome to The Tax Factor, the top 20 business and investment podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Roger Holman and Robert Salter.
Welcome to The Tax Factor, the top tax podcast that keeps you up to date on all the latest tax news, updates and silly stories about VAT cases, which are always popular unless you're a tax expert trying to navigate our outdated and at times ludicrous tax rules. With me this week is our regular guest, Robert Salter. Robert, welcome back to The Tax Factor.
Thank you. Thank you for having me.
This week, we're going to be having a chat about politicians and their tax returns, the never-ending saga of HMRC and service levels, some oddities around employment, and if we've got time, a warning to keep an eye out for tax scams, especially at this time of year when some people are making payments to HMRC, or they probably should have already done. Robert, politicians from our major political parties have been releasing their tax returns lately, which has garnered some interesting press comment. As is always the case, you can't necessarily believe what you read in the papers, can you?
Absolutely. There's been a lot of comments, some of it quite critical of the likes of Rishi Sunak and Keir Starmer, and the fact that their effective rate of tax has been quite low when you can consider the overall level of income and capital gains that they've had. So, for example, Keir Starmer had I think a 25% effective rate of tax when you look at the capital gains and the income he earns. Rishi Sunak was about 23%, and there's been, criticism of them for having those relatively low taxes. But I do feel a lot of that criticism is unfair. The reality is they've done nothing questionable or aggressive from what we know. We've had a capital gains tax rate of 20% for a number of years. And the fact is they've genuinely made capital gains. In Keir Starmer's case, it was a donkey farm / field that he had for his mother. And the fact that he's made some money on that, well, everybody's made money on it. And the reality is he owned it for 25 or 30 years. So there's no kind of inflation relief within the UK capital gains tax system. So when people talk about, somebody having only paid 20% on a £276,000 gain, the reality is in real economic terms, that gain was not £276,000 when you take into account inflation. So his real effective rate of tax on it would have been considerably higher. We don't know exactly how high, we don't know how much he paid for it initially, etc. But I think they've been very misleading in a lot of those stories. And I think the bigger issue, the sadder issue is they focus on things like this, which are quite minor, and then a lot of the major issues and problems we have in the tax system, they've tended to be ignored. So things like the child benefit clawback or whatever, there's much less comment about those things, which affect a lot more people and in many respects are much, much less fair.
There's a lot of cliff edge systems in our taxes that really do discourage working at some stages, aren't there?
Absolutely. If you are, for example, earning £50,000 to £60,000 a year and you have a spouse or partner who's claiming child benefit, the reality is if you've got 2 kids, your effective rate of tax is 65%. If you've got 3 kids, your effective rate of tax would be 71%. It's much more sensible in many cases to say, actually, rather than working 5 days a week, should I work 4 days a week or 3 days a week or something like that? And your net position won't be fundamentally much worse off, especially from an overall lifestyle perspective.
It's amazing that politicians seem to release their tax information and get chastised when actually they should be chastised about the terrible tax system that we've got. I mean, talking about the terrible tax system, we've got a really complex set of rules that a lot of people are falling over. There's a lot of press comment about the child tax benefit charges hitting in and people getting caught with massive penalties. And at the same time, HMRC are reducing their service levels.
Yeah, I feel quite sorry for HMRC in many respects because, they can't control the budgets and the funding and everything in the direction of the Treasury and the government. But if you look at HMRC staffing over the last 10, 15 years, it's been cut massively. Over the last 12 months, it was cut by another 5%. That is then compounded by the fact, as you said, we've got a tax system which is chaotic and confused and contradictory in many regards. A tax year end which is at the very kindest quirky and unnecessarily complicated. And yes, some of the issues can be perhaps improved by, investment in IT, artificial intelligence, etc. But that's never going to be a total solution. Yes, we should try and improve the tax system in terms of making it cleaner, more logical, fairer. People between £50,000 and £60,000 a year, for example, are not high earners. Unless they're self-employed or having letting income, they fundamentally shouldn't be needed to do tax returns. But with child benefit clawback, they have to do a tax return each year. So you're clogging up a system increasingly when you've got less resource in that system and more confusing regulations. And then you wonder why, HMRC struggles to deliver on just basic things in terms of, getting people to correct tax code or being able to register as an employer on a timely basis or get a VAT registration on a timely basis. And the delays you see in those areas these days are much higher than it was even 3 or 4 years ago. Now, some of that is because of COVID and the fact there's a bit of a catch-up, and that's fair enough because HMRC had to do other things during COVID. But yes, it is a problem, and there should be proper investment from the government. And historically, all the evidence shows if you invest properly, you actually get a decent return on it. This isn't sort of, lost money or anything like that. This is actually, we spend £1 today, we get £10 back or whatever in terms of, proper taxes paid timely, etc., etc.
It's simply a case of looking at return on investment, and that talking of simplifying the tax system. It's been talked about for the last 20 odd years. It's a bit naive for us poor tax advisors to ever think that we're going to get a simplified system.
I do accept that, it won't be fully simplified. And some of the complications are because life and business, for example, and things like that have become more complicated. But they still could do things legitimately that improve it for taxpayers, improve it for advisors, actually probably get more money in, and certainly are more efficient and effective. And, I generally think most people are trying to pay the right money. But things like the child benefit clawback, you may have vaguely heard about it, but you won't remember it unless HMRC come along and tell you on a timely basis. And in many cases, they're not telling you on a timely basis. You finally heard about it 2 or 3 years later. Oh, and then you got £5,000 or £6,000 bill plus penalties.
And they're not telling you about it because they don't have the staff to.
No.
It's sad that we can't simplify things and we can't get the right service levels. But one of the areas that you've spotted that it's throwing up some more oddities in the tax system is around employment taxes, isn't it, Robert?
Yes. So obviously I'm a bit of an employment tax geek, so I like employment tax issues. And obviously on some occasions, people almost ignore employment taxes or kind of it's the other taxes. So if you look at it from a company perspective, they often focus on VAT or corporate taxes and then the payroll, that'll take care of itself, for example, and or just a regular employee just say, I just pay my PAYE and that's it. I don't have to worry. Actually, there is some quirks out there, some issues that you need to be aware of that can come along and challenge you as an individual or challenge you as an employer. I think the first thing is the saddest thing, but at the moment, if we've got a recession, it's going to happen a wee bit more. Termination payments. Traditionally, if you're not sure how termination payments should be treated from a tax perspective, and there's lots of quirks within the termination regulations in terms of, is it pile-on, is it garden leave, is it ex gratia, etc., etc. You were always able to get a binding judgment from HMRC within 30 days, technically, although, there's some struggling to meet that. That's been cancelled now. So while they may give you some feedback and it'll be less official, less binding. So again, it creates more uncertainty for the employer. And that will create uncertainty for the individual, potentially, because they may suddenly need to do a tax return because they haven't had the right claims or whatever from a payroll perspective. So that is, again, part of the service level issue, but it's also disappointing because it creates, there's no win for anybody from doing that. It's a cost to people.
It's really sad how we can't seem to get something as simple as an understanding of what employment income actually is in this system. But I suppose, as you said rightly, the system is complex and so is life. So it does make a lot of things a lot more complicated than needed.
And again, linking into employment, and again, in some ways, a confusion of how things have changed from when the legislation was initially put together to how things are now. If you look at what I would call pickup vans or trucks, traditionally they were subject to a specific tax charge under our benefit in kind code, and that was basically a lot lower if you use a company van compared to if you had a normal company car, for example, charged massively lower, typically perhaps a quarter of the cost that you would otherwise pay. Now, the reality is over the last few years, the division between what is a van and what is a car in real life has become a lot more confusing, and they get a lot of these vans now that can actually also seat 4 or 5 people and take stuff, in the way you need it. And so there's a court case a couple of years ago, the Coca-Cola case, for want of a better name, as to whether these should be subject to the company car legislation or the van benefit in kind legislation. And that's basically decided the fact that they should, in many cases, be cars rather than vans for tax purposes. And that's basically kind of in effect being acted into law now from July this year. But obviously, as we're getting close to the year end, I think the call for employers is, if they're still using those kind of multi-purpose vans, which can be cars, can carry people, etc. Okay, what should they be telling to their employers? Because if those employees are still using those vehicles, they're suddenly going to get a massive tax charge compared to where they were historically. Now, that may be correct from a tax perspective, but then as an employer, what is your obligation? Should you be warning people about this, for example? I would suggest you should be trying to have some sort of communication in place so they don't just get caught and have a massive shock when the new regulations come in from July this year.
Yeah, that's right. And another thing that catches people by surprise is the number of phishing scams we all seem to get in our inboxes these days. Now, it does seem like government departments should be immune to being imitated, but not so in the case of HMRC.
Agreed. And, obviously, we can only ask people to be very careful. If they're not sure, I think the key things for people to take away is try and call HMRC, try and contact them in a separate way and things like that. Don't just click on links that you get, for example, or if you get a phone call saying, oh, you need to pay X tax because you haven't paid it, and do it now because the police are going to be on your shoulder, within a minute. Obviously, be skeptical of those type of things. Perhaps easier said than done, and, but it is that, take a second, think about it, find alternative information, etc. And if, for example, you're comfortable you did make that payment by 31 January, or even if you paid it late, push back when you get that dodgy phone call saying you have to make a payment and things like that, because 99% of those calls will be iffy. And the reality is any genuine contact from HMRC, they would be more than happy for you to take care, be cautious, try and find out via a separate route before you make any kind of payment or whatever you needed to make.
That's true. And HMRC are very clear that they will never ask for payment via email. And I've certainly never experienced a real HMRC officer asking for payment on the phone. And like you say, call them back, phone a real HMRC number. It might take you an hour to actually get through to a person with their service levels, but you'll get there in the end.
Yeah, and it's one of those things where doing it correctly, yes, there's a time cost, but that's not real money at the end of the day. It's much better to be sure, be confident, and only do it when you're 100% comfortable.
Thanks for those words of warning, Robert. I think that's about all we've got time for this week, but there's just time to mention Blick Rothenberg has launched its updated interactive tax planning guide. It's full of tax tips and actions that all taxpayers should consider in advance of the tax year end, and it covers a range of areas including income tax, property, tax-efficient investments, pensions and inheritance tax. It's free and well worth a read. You'll find it on the Blick Rothenberg website by clicking the link on our homepage.
If you enjoyed this podcast, and I hope you did, why not give a listen to our sister podcast, Brave Business, the podcast for entrepreneurs? It is now officially one of the UK's top business podcasts. It is hosted by journalist and broadcaster Declan Curry, and the series focuses on providing practical guidance, insights and opinions from our industry experts and guests with real experience helping entrepreneurs make informed decisions. The latest episode has just been released and is about the challenges of moving goods internationally, with Blick Rothenberg's customs duty partner Simon Sutcliffe and guest Charles Hogg, the commercial director at freight forwarder and customs broker Unsworth.
Thanks to Robert for joining me this week.
Thank you for having me.
Next week, Heather Self is back with a new voice to add to the tax factor, Melissa Thomas, and they'll no doubt be looking at what might be in the budget on March the 6th. I'm Roger Holman. Thanks for listening.
That's the Tax Factor. We'd like to thank you for making us one of the UK's top 20 podcasts. Find all our previous episodes wherever you get your podcasts. And join us again next time on the Tax Factor.